Good morning, good morning. How's everybody doing this morning? Can you guys hear me? Anybody in the room? All right. Okay, we got a few people here. Everyone slept in? Hey, TM, what's going on? How you doing? Good morning, everyone. Okay, people are trickling in now. Hey, Doc, how are you? Nice trading this morning. Hey, Raj. Lonigan, what's going on? Petra, what's going on? How are you? Oh, Petra, you and I need to talk. We need to help you find a seller. Okay, Jerry, we can help with that. Why don't you DM me? All right. If you guys have anyone who's been having trouble in the room, please DM me. Uh, if you guys are having trouble with your accounts, don't. Um, I've got easy solutions to your problems, so don't fish around in the dark for them. Right? Just reach out. Okay. What are we looking at this morning? Happy Fed Day, right? Happy Fed Day. We have a little bit more action than usual on a Fed Globex, right? It's because of rollover. A couple of things to really keep track of, right? One is that overnight low. What did I post yesterday at the close? I told you guys look for a break of 60.17, right? Now, what happens if a level doesn't break? Okay, I'm going to be like the guy in Ferris Bueller. Anyone? Anyone? No? Bueller? Anyone? What happens if you don't break a level? Come on, guys. Right? Rotates back up, right? Our low is 60.17 and 3/4. The level I called out last night was 60.17. You had 3 ticks, right, that told you, hey, what else did we have? What kind of low is this in market profile? Now, candle candle traders are a bit of a disadvantage here because there are a couple of things about market profile that are practical. There's a lot of stuff about market profile which is about as useless as you know what on a bull. Truth be told, okay? There is so much information that people take out of market profile, but what can you actually use to make money? Or what can you actually use from blowing up your account? One is a poor low at a mechanical low, tells you the market's trying to talk to you guys, okay? But nobody listens because everyone's got a big ego, okay? I know what I'm doing, right? I saw a YouTube video, man. These charts are trying to talk to you folks, okay? But you gotta shut up and listen, right? The chart is trying to talk to you just like your wife or your girlfriend is trying to give you directions pre-GPS, and you ignore her, and you're like, I know what I'm doing. You don't need to tell me where to go. I know which way to go. And then you end up in the hood, you get carjacked, and you spend a whole night in the hood trying to get out, right? That's what happens to traders. They just don't listen. The chart's trying to tell you, listen, man, if we had size selling, we would have broke 6017. Why? Why? Because the people who were buying 6017 front ran it, right? They wouldn't let it go any lower than 17 and 3/4. Why? Why? Because those people saw that supply was running out and they raised the prices that they were willing to pay. That is called short covering. Hey, John, right? You guys have to understand that these charts are business transactions. This is not random, right? This is not random. There's nothing random about $1 billion on a table, okay? Also, we had a poor low, which is a market profile thing, okay? So you got a market profile reference, which is called a poor low. What does it mean? It means that there's buying competition. Why is there buying competition? Because there's a lack of supply at that level. Ding! Should you be shorting that low, looking for a break lower? No, you should not. Okay? All right? So even if you didn't buy it and go long, right? Don't short into an area where everyone's buying, right? It's common sense, right? It's just common sense, okay? Clues. The market's trying to talk to you. Just listen. Exactly, Doc. Exactly. Right? Don't try and be a hero. A hero ain't nothing but a sandwich. 5 to 15 points daily is all we need. It's like your maximum, it's what is your minimum fiber intake for the day, right? Right? It's like a nutrition thing, right? Anyway, poor low, mechanical low, don't go short. Okay? Simple, right? There's no seller. Now, let's take a look. There it is. There's that overnight low. It's a poor low, right? Right at a place where nobody wanted to sell, right? Nobody wanted to sell there. So what happened? One time framing higher, back in yesterday's range. The market's been doing this in the overnight. It does a look below and fail of the previous day low, and it shakes out a bunch of longs into short covering, and then rip right back up, right? Learn the simple mechanics of markets, right? If you're having trouble, come visit us at the Trading Syndicate. We will teach you how markets work. Learn from somebody, and I'm not just saying this, but I've created markets, right? I've created markets to sell stock into, right? So if you create markets instead of just trade them, you understand how they're structured, right? So now we have a short position in the overnight we have a short position where there was an excess of supply yesterday. How weird is that? Hey, Tampa Trader. Good morning. All these people in Florida, I'm jealous. So there's a 2-point short position here. Let's see if it fills. Why is there a short position? Right? Structurally, when we took out the old overnight high here in J period, which I'm going to talk about, the people who were short underneath 49, they all have their stop here. The ones who are using imaginary stops, or the ones who are using, what do they call them? Mental stops, right? Or even size traders who don't use stops, they'll be bid to cover here. That's why that K low has not taken out 49.5 yet. Okay? So what the goal now is, right? What's the goal? This is the overnight point of control. This is where 70% of your inventory is priced, right? So if this is a car dealership, this is where 70% of your inventory is priced. So here you've got your Hondas, your Lexus, whatever, right? Higher end. What you're trying to do is you're trying to sell them up here. This is called retailing it out. So this is the wholesale position. This is the attempt to retail it out using the trap shorts to hold the market above 50. Right? Do you guys understand the concept of leverage? In a financial market, right? When people are trapped long or short, smart money leverages those people so they can maximize their profits, right? You leverage short sellers because they'll hold a market up for you. You don't have to buy a single contract. All you got to do is when you get down to 51 is you just got to stop selling, right? People go, oh yeah, there's big buyers at 51. No, there's some buyers at 51 and the sellers just stop selling. And when you stop selling, price rotates back up, right? Simple. The market can only go one way, up or down or sideways, right? That's right. Up, down, sideways. Sideways means business is slow. Stuff's not rocket science, right? Right? You know, to put it in docs terms, we're not doing a mitral valve replacement, right? We're selling product, right? It's not rocket science. So now we're in distribution, okay? So let's go take a look now that let's go take a look at my balance loans. My balance zone is 40 quarter to 44. Double it to 51 to the upside, double it to 32 to the downside. And then all we do, these are profit and discount zones. So you go from 2 times to 4 times, 8 times. It's real simple. This way you can keep track. See now, we ran out of buyers, so we got to put it on sale. So the shorts just got filled, right? Where's VWAP, everyone? Should go and anchor VWAP. Oh, there it is. All the way down here. We're in pure distribution. Yeah, there we go. Right. Now these sort of larger white lines, these are from yesterday. I left these in because that's where the sellers were yesterday. Let's see if they're all at all reactive. I'm experimenting. So now we have our zones. We look to trade these zones. So right now it's doing a look above and fail of 51. So if you go short, let me open up my trading account because this one is just for a show. There we go. What's contract volume like? We're filling the single prints. Yeah. Old contract's almost done, folks. Old contract's almost done. So now we're backfilling. So if how, and I didn't have my trading DOM open or my trading account. So how you would have traded this is a look above and fail. So there's your short, there's your stop. Now your first target is going to be 47 and 3/4. But you want to front run that and put some bids here just at 48, 48 and a half. Right? So if you're short 5 at 51, put a couple of bids down here because obviously there's going to be some buying at the bottom of that candle. That's where we leapt up, and that's where you're going to see some bids right here. See how the market has not gotten down to that level? That's front running, right? So not enough buyers to keep price over 50 just yet and move that point of control from the overnight, which is only 994 contracts. It's not much, right? Yesterday's point of control is down here. So how now do you understand the concept of distribution? We take this inventory from yesterday. Here, let me just move this over for a second, right? Right. So what we do is this is where yesterday's inventory is. We retail it out in the overnight, and then hopefully we can sell it higher, right? Because that's what business is about, right? Taking goods and selling them for profit. That's what market profile teaches us or shows us. It very quickly shows us where inventory is being distributed or accumulated. And then we use the 1-minute chart for execution, right? If we're day trading. Does that make sense? You guys catching this stuff? So when you can talk through a market and understand what it's doing, you have a hell of a lot better chance of trading it, right? You're not going to make really bad decisions. Your mind won't get away from you. All these stupid things that we talk about like FOMO and MOMO and BOMO and all that crap, that all just melts away because you understand the business that you're trying to do, right? How can you make money in a business if you don't understand the business? Exactly, Doc. It's got to be a little street smart, right? Little practical, good old common sense, right? And stop reading trading books, okay? Stop reading trading books and go and actually sit and watch a market, right? I hate to say stop reading, but really, stop reading books on analysis because you need to learn how to take a punch. You need to learn a system that you train yourself like a pilot so when you hit turbulence, you don't freak out and panic and start reaching for a book, right? You have to understand the business reason why you take a trade, why you get out of a trade, right? And if you join us at the Trading Syndicate, little plug for the room, right? Use the discount code, right? It's about 50 cents a day, and we'll teach you these things. We'll teach you common sense in markets and business. And what's the biggest thing when you're learning to trade? You blow all your own money, right? So our friends at Apex Trader will give you a deal. It's in the description, right? Learn how to trade, learn good business habits using other people's money, right? Be smart, folks, right? See how it's kind of hung up right here? Because the position is here. So we took the market and we sold it. We sold it right back. What is this? Cost basis. Oh, sorry, Howard. I forgot to do that this morning. So what's going on here? Anytime a market goes and just stops and turns, that means the sellers have identified buyers here. Now this happens all electronically. But if you were just to draw a line there, think of that line as a door, a glass door. And the sellers see all these buyers lined up here outside the door. So what are you going to do? You're going to raise price, right? But the sellers are competing here. That's why you get this choppy, and this, don't trade, right? When you get like a barcode pattern, these little patterns like this, don't trade this crap. This is where people get chopped up, right? The chart will tell you a lot. All you got to do is learn what the chart's really saying. Don't worry about patterns, right? And all that stuff. Just the chart is trying to tell you these are the transactions that are taking place. The chart is telling you this. It's translating time and sales into a graphical format that is easier on your eyes. So in the old days, all we had was this, right? Have you looked at a trade as in the one you just talked about and so okay, first target but it's 49.50, but in this case it's going to crash through? No, I don't see it until I see people offering lower, John. Remember how I talk about the offer? Right? So if I was short 51, right, against that candle, I know that there's going to be some buyers here. So I'm going to cover some here. Now, if the offer starts lifting the way it is right now, I know that it's not going to crash through. Right? Now, why would I know that? Because this is an inventory correction down to the cost basis. This is how much the goods are priced at. You put it on sale back to cost basis, and you kind of stop just right there. Now, the people who are short down here instead of long will come and start to buy. And that's exactly what you're seeing right here. Now, once you learn the look above and fail at an edge, you can use the look above and fail of a level. So when we went up and came back down, you'd be shorting 54s against 55 quarter, and then looking to cover at 51. And if it drops here, that's a bit of a gift, right? This is the front end of the move. This is the back end of the move. You always want to short the back end of the move, right? Always short the back end of the move, not the front end of the move. The front end of the move is for large sellers to distribute size because it creates liquidity. You guys are always talking about liquidity, but you don't really know what it means. Everybody who asks about liquidity has no idea. Liquidity is the ability to transact size without adversely affecting price, right? So if you need to move 5,000 contracts and you started selling, the market would just dump. But if you sell into an up move, they'll take it. You just have to sell judiciously. And then when they stop taking it, you put it on sale. And when you put it on sale, that's the move you want as a short seller. But you have to identify that there's a seller. You can't just go and short a market thinking it's too high, right? It should do this, it should do that. What are you, the goddess of order flow? Right? Or the god of order flow? No, you're not. It doesn't have to do anything, right? A market will do what the order flow and the inventory tell it to do. Now, London's going to open. Let's see if London can get down to and break those lows that we have here at 49. A couple of minutes. These contract rollovers are a little difficult to trade. That's why you really want to wait for your A plus setup. Look at those two candles. The tops are exactly the same. That means the seller is initiating before 51 and a half. What does that really tell me? So if I was short, for example, say I'm short, right? And I'm a stubborn short. This is my backup, right? If the market offers over 51 and a half, I know that the sellers that were holding it down here are gone. They've moved their prices up. So I should not be short. Does that make sense? Now I realize these concepts are new and you guys don't think like this because you've never made markets, right? You've always been the consumer. You've never been the distributor. That's why you guys have trouble understanding this stuff because as a society, we brainwash people to just buy stuff, right? Not to sell it. Watch. So if you're short under 51, you can stay short as long as those offers don't get over 51. Right? Pretty slow, huh? Right? See how the offer's lifting? Now watch when the offer gets to the white line. When it's really slow, the good thing is, okay, you're not trading up a storm, but you can actually learn something. Watch that red line, watch the white line. If the red line gets above the white line and you're a short seller, that's a warning sign because it means that they're raising price. There. You see? Right there. Do you see that? You've lost your seller at 51. Let's see if they come back in. There they go. Right? They came back in. Right? This is very common in choppy markets. Right? You woke up that seller. Now watch the next candle. Look at the top of that candle. Just watch. Don't try and trade this. Just watch so you can understand what's going on. Right? I guarantee you, if you spend some time watching, there's a guy, his name's Dante. He's been around for ages. Really good trader. And he says 99% watching, 1% execution. See? Look how the offer. So if you were short, you could scratch your trade at least and get out before things get out of control. Practical information that you can use. That's what we teach at the Trading Syndicate, right? It's got to be practical. Otherwise, it's useless, right? If it's not practical, it's useless. You hear about people talking about divergence, convergence, what all that stuff, confluence, flatulence, right? All that stuff, that's all useless. It's not going to help you at all, right? Yeah, the Commitment of Traders report is something that I never pay attention to because I'm a scalper. And even if I was position trading, I wouldn't look at it at all because it would bias me, right? In these markets, hello, it's very, very important to let the market tell you what's going on. The reason why people have problem is because they inject or try and put their will or their intelligence or their ego on top of a market instead of listening. Right now, we went up to 52, and now we had a look above and fail of 51.5, and the market comes back to 49. Now, is that tradable? Not really. Right? So you have to determine, is it worth me putting capital at risk in a choppy environment? You might take one trade and scalp out 6 ticks, 8 ticks. Don't overdo it. No, John, I would have stopped out, right? Had I been short under 51, it can get really out of hand quickly. I don't mind admitting am I wrong and then it going back in my favor. It just tells me you should not be trading this because it's too choppy. Right? So what did I say 2 minutes ago, John? I said just watch. I want you to watch the offer. I don't want you to think about taking a trade. I want you to observe from a neutral place where you have no attachment to the outcome. When you have no attachment to the outcome, you will be able to absorb information. When you're attached to outcome, like I'm short, it's got to go down. I'm long, it's got to go up. That clouds your senses. right? The best analogy I can use is the scientific method. When a scientist does an experiment, they're not attached to the outcome. They're observing something without attachment. And that's why if you watch the videos I've put out, I've put one out on why you should just watch a market. You should spend time watching, right? And you should spend time observing, right? Yeah, but I'm not saying, right? Yeah, but if you were short and it got above 51, I would have covered, right? Yeah, this is a distribution cost basis. Exactly, Moran. Exactly. We're taking this and we're selling it here, right? Right? There's not a lot of customers, so this is the best we can get for it tonight. See, John, how it's jumping back and forth here over this level, right? So just spend time watching. Just spend time watching, right? And when I say if you're short, John, it's because, as I've said to you a few times now, right? Because there are people who are trading, who are in trades, right? Even though you tell people don't trade this, they'll trade it, right? That's why I say if you are long, if you are short, because I realize not everybody's just sitting and watching, even though they should be. Yeah, that's for people who aren't listening to me, right? If you are long, if you are short, those are the people who aren't listening. So I try and keep, because I know they're going to lose money, so I try and minimize the amount of money that they're going to lose. That's why I say those things. Because of, say, that are, say, 50 people are watching this stream, right? Maybe 3 people are actually sitting and watching and actually listening to what I say and taking it in. The rest are just like getting long, getting short, getting stopped out, getting long, getting short, getting stopped out, right? And that's just the way it is. So for those people, right? For those 47, 45 people, I try and help them not lose money. Or I help them lose less. Because I know that they're just clicking away. Click, 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 right? Like they're on Amazon, right? Instead of buy it now, trade it now. Yeah, so I don't look at the commitment of traders at all. I've never looked at it. Like, I have friends who position trade like 5, 10,000 e-mini contracts. They look at it. But for me as a retail trader, I really, really want to keep the amount of information that I look at to a minimum. That way it helps me execute. It helps me stay focused, right? The less information I look at, the happier I am. If you look at my early videos, like from 5 years ago when we started the room, I had all these charts. I was running like a 5 minute and a 10 minute and all this stuff. And now I just have this on just to tell me where the stops are. But when I trade, this is the only thing I look at right here. Right? I know where the stops are. I know where the inventory is from this chart. But this is the main trading chart. All you need is a 1 minute chart to trade. Right? If you're a day trader, all you need. Right? And that's the thing. You know, people ask, do I need any special software? Do I need market profile? No, you don't. If you come into our room at the Trading Syndicate, all you need is a 1 minute chart, the ability to draw a straight line, and the ability to listen. Right? That's all. Exactly, Doc. That'd almost be like retail traders in equities looking at DTC sheets, right? You guys know what DTC sheets are? They're security position reports. They tell you where all the stock is in the system, right? You guys don't need to know that. That's why most retail traders don't even know that that exists. Yeah, it tells you exactly where all the stock is at every brokerage firm, every clearing firm. That's something when I'm doing a deal I look at every week. I look and see the movement of the stock in the system. Just like a volume concentration report. In the old days, they used to have these things called volume concentration reports. And they would tell you every month what every market maker did in volume for each particular stock. So if you had to do any forensics on a stock, you'd look at the security position reports, which were called DTC sheets back in the old days, and then you'd look at the volume concentration report to see whether or not someone's messing around with the stock or one of the partners is selling stock when they shouldn't be, all that sort of thing. Right? And then there's another thing called a NOBO list, which is the non-objectional beneficial owner thing. So all of those things you don't need as a retail trader, right? It's a crap ton of information, right? But it's not going to do you any good, right? Just watch the 1 minute candle. Right now we're distributing a little higher than 51, right? Because this, I'll explain exactly what's going on now. This brought in buyers, right? This brought in buyers, and now we brought in people who are willing to pay over 51 and a half, right? This was a little sale, and it brought in some buyers. Not a lot, but just enough to hold price for the last couple of minutes over 51 and a half. And every time we dip underneath, it brings in buyers so far, right? So this is like the nightclub. There's a lineup. People come in. This is them paying the bouncer to get past the door. Pay a little extra, right? It's just all common sense, folks. None of this is rocket science. Is it tradable? No. Is it good for education? Hell yeah. As they say, that's a big Texas 10-4, right? Where's our sellers now? Our sellers are here. See, price stability brings in buyers, right? Anytime you get kind of sideways action, especially after a sell-off, right? Anytime you get that sideways action for any period of time, that that instills confidence. And that's why you get this move afterwards. Now let's see where there were sellers. Will this be a bid, right? Because there's a little position here and there's a little position here. So the market should come down to this position, stop selling, and do this. Just on a small time frame. There, see, watch the offer, see if it lifts. We have sellers at 54.25. Can we get a print at half? Not yet. Come on. You know you want to. There we go. There's half offered. There we go. There you go. So if you had bought this backfill, you'd sell into this, right? Put a 54.75, 55 out, right? There you go, right? And you sell into it, right? Flat, right? So what I did was I bought the bottom of this candle using this as a stop. And then I just sold into this, just using micros as a scalp, just to see if my brain's working, right? Hey, Faye. How you doing this morning? I think VWAP is 60.40. Let me just double check. It's quite a bit underneath us. The POC's not moving up yet, Howard. You have to give it time, right? It takes time to get rid of inventory, right? Right? The slower it is in a night market, it's going to take longer to sell the donuts, right? Yeah, VWAP's at 60.38. Exactly, Moran. Now that's not an A plus setup. That trade I took, that was a test trade, right? Because when we backfilled in this candle, right, we should have held this level. So I bought the bottom of that candle with a couple of micros, and I put my stop underneath 52.5. And then as soon as it went up, I let them have it. I had my orders in. Ding, ding, ding. It just takes you right out, right? Just to see whether or not I'm executing well, whether my brain is working, right? Now the sellers are here, right? So the sellers, you can think of the sellers like, you know, when you have a cat and you're playing with it with a piece of string and they keep lifting it and they keep jumping higher, that's exactly what the sellers are doing because they see buyers, right? Now, when the buyers start backing off a little bit, the sellers will drop their offer and create the top of the candle. The top of the candles are where the sellers initiate. The bottom of the candle is where the sellers stop selling. And everybody says, what about the buyers? I go, don't worry about the buyers. The sellers will tell us where the buyers are. That's their job to. How do I know? Because I've done nothing but sell billions of shares of stock into retail markets for over 25 years, right? So I think like a seller, right? You guys think, how am I going to make money on a trade? I think, how can I get people to buy 100 million shares of stock over an 18-month period? What do I need to do to generate enough buying over 2 years that my clients can liquidate 100, 200, 300 million shares, right? How do I create a market, create the buzz, get the ducks quacking, right? There we go, a little bit of a sale, right? So you have aggressive selling here because there's competition, right? Where did we go? Right to the white line. Look at that. That's not coincidence, right? We went down there. What happened? The buyers were sitting waiting, right? As soon as we broke that low and dropped down, the buyers are all sitting there waiting like customers outside of Walmart on Black Friday. Position, position, right? These are cost basis areas, right? Yeah, that's pretty much it. Spend some time watching markets, folks. Watch markets and think like you're actually the seller. Yeah, exactly, Doc. I don't talk about that because it's a little complicated for retail, right? But yeah, if I want to sell higher, I'll throw in a bid to make it look like there's a big buyer, right? Right? Well, let's see. It'll be gone as soon as they see selling competition. I'll pull that bid so fast it'll be like a New York second to pull it, right? Right? You got to paint a picture. That's why traders who think the DOM tells them anything are usually all completely upside down. Because no large trader will ever you'll show a big buy order just so you can sell off the offer, right? So when I'm selling stock, I'll put a bid for 1 million shares, right? There's the bid, and then every single one of the offers will be me. So people will come in and start buying off the offer, thinking that there's a big buyer. But that's me, and I'm distributing and I'm selling here, right? And that's how you make markets. That's why this candle chart, the 1 minute candle chart, which is everyone has access to this, and this you can use in equities, forex, anything, right? It's so simple, right? You got to remember before 1995, 1997, there was no screen-based trading until the mid to late 90s. And even then it was really, really slow, right? When did I get my first cable modem? I got my first cable modem in 1995. Before that, I was on dial-up, right? So before 95, everybody just had a piece of paper and a pen or a pencil, and they'd see the price every 15 minutes. 10-second chart. Very cool. Does anyone have any questions? You guys are so quiet. I know this price action tends to put people to sleep. Don't worry, it'll be quiet until like the Fed meeting, and then after the Fed announcement, it'll go nuts. I haven't even. What are they expecting to do? Are they going to lower interest rates, or are they just going to keep them normal? Keep them as is. Raj, you watch Bloomberg. Jobs data too? Okay. It's always curious. overall, if you're a short seller and you're going into this Fed short, 60.17 is your big level. If you can break 17, we can get down, on a Fed move. If we break 60.17, look for 59.80, right? But if we don't break 60.17, which is the overnight low, and the low of 2 days ago, it's going to rotate up. And if we get over 60.66 and can't get underneath it, right, for the love of God, don't be short, right? Because once we clear 60.66 to 61.11, that's the only inventory we've got before this thing starts taking out new high or taking out the old highs. Just be aware of your surroundings and don't put in trades indiscriminately. Okay. I don't know, Kevin, if the market is open tomorrow. I am not sure, my friend. I'm sorry, I don't know. I imagine there'll be some sort of a Globex session. Like there's usually an electronic session, right? Like a shorter day or something like that. I don't know. Uh, no, tomorrow's Thursday, right? And it's closed Thursday. Is the quad witching today? I don't know. I never keep track of these things. My bad. That's it for me. Thanks, everyone. Please come visit us at the Trading Syndicate. Use the discount code. Have a wonderful trading day. We'll see you at 9 o'clock. See, look at that. Little look below and fail of 51 on the M open. Let's see if we can move this point of control up. Good distribution, right? Good night for business, right? Lots of buyers. They might be forced buyers, but that's okay, right? Remember, have a good night, John. Get some sleep. 6017, it's got a break for lower, okay? All you gun to the head short sellers. Okay. Trade well out there, folks. If you need me, give me a DM. Thank you. Bye for now.